What's up, guys? So today I'm gonna just show you how I trade indices during New York session. So as you can see here, this is Nas100 on a 15-minute chart. I only pretty much stay on the 15-minute chart with this. I use a 8 simple moving average and a 20 simple moving average, and I just pretty much look for the M's and W's around the opens. So New York session opens at 9:30 Eastern time. So if you go over here, I mean, it starts painting the session at 8 o'clock, but the real New York session opens at 9:30 Eastern time. So you can see here all the volume came in on this 9:30 candle, right? But we didn't take buys for one, because if you were going to catch buys, you would have had to catch this W that happened here to catch that. So in this case, we're just waiting for the M to form. So you see this move here, you see the 9:30 candle, it closed like this. Then after, you have manipulation higher, and it ran into an order block that's sitting up here. And let me just mark that off. So the order block is somewhere in here. Is 50% of this last up candle before the down move. And it just filled all this inefficient price action in here. And after that happened, you can see you got a bearish candle here, right? So this was the 9:45 candle. So for me personally, I want to take trades based off of if I see a big impulse up and then a bearish reaction after. It has to be like almost the same. I explained the bodies have to be the same size, if that makes sense. So you got this body here. This body is pretty big. This body is pretty much the same size as this one, and it's right around the open. So for me personally, I see this buy was the manipulation to trap buyers in the market, and this wick here got even more buy orders into the market. So the fact that this closed bearish tells me that sellers still have control of this market, and that it's actually reacted to this order block. And then at the same time, even though that was a big W, even though this was a big W here, you still have an M at the same time, right? That it could still go that way, right? So what I was looking at was, I started to wait until this next candle starts to form to see what was going to happen. It wicked back up, and as soon as I saw it flip bearish, take sells here. You have your stop loss. You can have your stop loss above these bodies. I personally have my stop loss above this last wick of this last up candle. So stop loss up there. And I was targeting 1-to-1s. So that's just the 1-to-1 there. 280 points to make 280 points. TP was hit literally on the same candle. So then you just wait. And I mean, you can see here, you got a bullish order block here, but you're still in that downward move. So you're not looking for buys, right? So then at this point in time, there's no trades. So then you just have this move here. It creates a W here. And I mean, personally, I'm not taking the buys after, even though this closed above the 20, I'm not taking these buys because I see that this was respected, and I'm just looking for this to come up and pretty much mitigate this order block. So you find the order block by taking the 50% of the last up candle before the down move. So let me take all this stuff off my fib and just leave the 50% on. And you can just mark that off. It's the 50% of the body to the open of the candle. So you just mark that off, right? Don't need that anymore. And you can see price came right back and wicked into this area. So now that I've seen this wicked in here, we got this bearish candle that formed here. Even though it's not the same exact size, I still see this is a fake buy before sell, because everybody's thinking this is buying because they see all this bullish momentum. And then boom, you get the buyer stopped out with this wick here. You get selling pressure, and it ran right into this order block here, right? So that's where you want to, and at this time of day, it's about 1 o'clock p.m. So you still got time until the close. Take sells here, same stop loss above these bodies here. In this case, I'm not putting my stop loss up here because this trade already happened, telling me that I don't want it to come anywhere really up here. So I'm just the safe stop loss is pretty much at these bodies. And you could target your 1-to-1. You target your 1-to-1, or you could target these lows right here for more than a 1-to-1. Personally, I just take my 1-to-1s. So pretty much you're risking 200 points to make 200 points here. TP was hit. And you can see at the same time, like when TP was hit, you could even caught another entry because it sold off here, closed below the moving averages. Yeah, pull back here, but I mean, all these candles in between this candle, and this candle, all these are entry candles. because you can see the moving average is even telling you that it's forming an M. So that's why that sell happened. And that's another trick too. So like you'll see here how the moving average is the 8 crossed below the 20, right? And then it crossed back above here. And then as soon as it crosses back below it, it takes off. But you want to catch it before this cross happens. So you got to understand price action. That's how I saw that this was going to happen because I saw this candle here, saw that rejection, like I said, into the order block, and it sold clean off. And this is just one example. That's just today. So what happened yesterday? Let's go over here. See what happened. There's that 930 candle again. You see how it impulsed up? It grabbed all the buy stops that were resting above here, made everybody think that was going to buy up. That's why you don't take it right off the open. And then you can see start to come down and literally broke the lows of this candle on the 945 candle. Broke the lows here. This is where I'm taking the trade. I'm not going to, in this case, since this candle is already big enough, I'm not going to wait for this to close down here because more than likely, like you can see here, you kind of would have been too late. Yeah, you could have caught entry here and made these points. But personally, like I'm taking entry as soon as it's cracking that 930 candle at the bottom because I can tell that that's an order block. You got tweezer top wicks up here. And see, so you mark this low here, right? As soon as it starts impulsing through that, sell here, stop loss above the tweezers, TP 1-to-1, 600 points to make 600 points. Or you could have taken it to these lows here. Same shit, dude. Like 1-to-1, easy trade. That trade took a matter of 15, 30, 45, hour, 15, like let's say an hour and a half, right? And you can see how it's still an M. There was a W that happened here during London session, but the overall thing is the M. This is the overall M. So that's what you really want to be looking for. I mean, you can, like I said, you can take more than a 1-to-1, but for me, this is like the perfect setup. I don't trade Asian session anymore, or sometimes I'll take my trade during London around 12 to 3 o'clock in the morning, but for the most part, I just trade New York. But if you were trading London, I mean, same thing here. You got the cross here, the price crossed it, came down, tested this level, held it, literally held this level, formed an order block that impulse down, the impulse up, buy off of this candle here. Boom. You got your 1-to-1 stop loss below those lows, 446 points, 453 points. TP hit, and then you would have caught the sell during New York, same thing. Let's go to another day. So like same thing here. Okay, so let's find that 9. This wicked candle is a 930 candle. There's no setup here, so we're not taking this trade yet, right? And you see this big impulse candle to go up. Personally, I probably would have taken this trade with this buy right here because I can see from a retail perspective, you got this trend line here that was broken out of, retested, and I can see. So that's the thing too. Like I was anticipating this M, even though this M never happened up here. I was anticipating this M, so the only thing I can do to create the M is to go up. So after this impulse candle here, buy stops below the lows. So a 620 point stop loss. TP 1-to-1. You can see, yeah, you went through some drawdown, whatever. Still hit TP. Still flew through TP. So, give you one more example. Okay. So like this here, I mean, if you caught this during London, cool. Other than this was probably a no trade day because it already impulsed like the whole session. So that was a no trade day. This is just chop here, but let's see if we can break this down. So you got the 930 candle here, right? The 930 candle impulsed those lows, came back up. It went even lower, came back up, created this candle, still not buying here. You get this bullish candle, still not buying. I mean, you could have bought that, but personally, I'm not buying that. It went down, it tested this again to form your W. That's your little miniature W in here. Start cracking resistance, you want to buy, right? So you're cracking resistance, buy here, stop loss here, 1-to-1. In this scenario, your TP didn't get hit. It came really close to it. I mean, if you took profit up there, cool. But for me, I'm not taking that. It's gonna have to take my stop loss or my TP. So it went all the way up there, came down, played around, and then New York session closed. And this is the only way you get out early. If the trade doesn't hit stop loss or TP before the end of New York, get out of the trade to reevaluate. So I mean, you pretty much would have taken like a small, like probably like 100, not even 100 point loss in this trade. Um, but that's just a situation where it didn't work. Here's one last situation where, like, I mean, it was just a perfect trade. You got, let's see, here's that impulse, that 930 candle right here, this impulse right here, and then you get this wicked out candle here. Still not taking the trade, even though this closed like this, because if you look at it, that doesn't even look like that's about to sell. These are still spread apart. It just grabbed liquidity above here, so you're not taking that yet. You're just waiting. You're waiting for it to form that M. That's where I'm taking the sell. Boom, drops off. Literally, you see how that's the point of decision, right? So, because at this point, this is where it came and ate liquidity above these highs. So this wick ate liquidity here. You don't want to take this immediate sell because you're looking for an M. This impulse up here, pull back, retest to this small order block right here, close below the 8 SMA on this candle right here, sell off. Sell right on that candle, 1-to-1. Stop loss up there, 333 points, 333 points, 340 points, whatever. 1-to-1. TP was hit. And it's just that simple. You literally could take one trade a day and just be done for the whole day, not to look at charts, anything. So I hope this video helped you guys. Please leave a like. If you have any questions, comment below. Thank you.